Good afternoon, all. Camelback Trading 2724 coming to you this Friday afternoon, June 5th. Now, what you have on your screen is, again, I'd like to remind you guys, I'm doing a webinar a week from tomorrow. I have a bunch of guys from my trading room already signed up. I welcome everybody from my YouTube followers, my Twitter followers. Come join us. It's pretty good. It's cheap as heck. And I'm donating a percentage of it to a very good cause. So check it out. And I hope to see you there. Now let's go to the market profile. What a day. I don't know how else to describe it. This is just incredulous what took place today. As my pre-market video, we were looking higher, gapping higher. The number came out. We just exploded to the upside. And I mean exploded. We had an opening drive up, right? We gapped higher and got by, I don't even count these couple of ticks below it. Drove straight up, never saw the opening again. The only thing that I think the Bulls probably did a little wrong today is they just absolutely blew out their enthusiasm way too quick, right? So they exploded in C, D, and E. Was just absolute, incredible, relentless buying. They got way stretched out. We talked about this in the channel, in the voice channel room. I did not take a short. I would not take a short up here. I was actually hoping F period had better legs than it did, got up to D, couldn't take that out, or even got up to around E's high and failed. Then I would have taken a put play there to see it roll over. I only took one short on the day. That was later in the day. It was all longs for the most part. We had a very good day in the trading room. We end up, I can't call this. We had a trend day that failed. We had two sets of single prints that failed late. Can't really call this a P shape. It's ugly. I just think bottom line is we had such a tremendous run, not only this week, but the previous 2 weeks. And then we just blew out in the first hour and a half. I think the buyers just exhausted themselves. Doesn't say much for the sellers either. We end 10 wide. If that's what they're going to call victory, that's pretty sad. The fact that we can only push down $2 from the high and still end up over 2.5% is pretty incredible. Again, volume 131 million. So not bad. The average is 91, and we still have the after hours. As far as my trading. So in B period, in A period, I did nothing. I said I would do nothing until I get something to lean on and whatnot. And that happened in B period. B period open, came down, took a long against the opening, took it out when we got near the high. Then again, in the 15-minute bar, came down. We had poor structure. Again, got on board for two reasons. We still had the opening, and we had poor structure. Took it up and got out. Now, you don't know exactly what's going to happen. Yes, we were one-time framing up, but we were up already a tremendous amount. I don't know if we're going to start popping the top and then coming back in. Obviously, that did not happen. And then we just ripped C, D, E. Took not one trade in C, D, or E. It just wasn't worth it for me. It started getting away from me. There's no way. Here's the biggest feat of the day, because I'm going to make a bet. For every person that got long and held this the whole way, I'm going to say maybe 5% of traders out there held the long position in B, C, D, and E. I'm going to say 95% of traders probably started shorting this, if not C, in D and in E, and got absolutely annihilated. Well, I wasn't part of the 5% that was awesome at holding this trade, but I certainly wasn't part of the 95% that got ran over. And I can assure you, many did. So I watched it. If I thought it was getting away from me, why don't, even though we had single prints and everything, yep, I could have bought it in D. I could have bought it in E. I actually did take one in F when we opened before we stopped the one-time framing down and actually had a winning trade on it. But when I saw it wasn't getting legs, I just got out of it. I did it against the single prints in E. in D period. And it did work out, but it got no legs. I got out of it. Now, I couldn't bring myself to take a short in F period. Just couldn't. Even though we had the large set, I was looking now to see if and what kind of afternoon pullback low we would get. So I really didn't do anything, believe it or not. We did get one. I did not take the long. It flushed out quick. So I just watched it. I did not take another trade until L period. L period got up. We were one time framing down now. We started going down. I was like, okay, I didn't even take it up here. I took it all the way down here. I'm like, the odds of filling at least this set of single prints is good. Got on board with a short, and that's exactly what happened. It worked out. M period open. I usually don't like trading M. M decided to flush, filled the single prints, got to my value low. I took a call play against it, and it went up pretty nicely. Got out of that, and then I didn't do anything the rest of M period. And today I traded in both the ETF and options. I actually took some option plays. In fact, I have to... When did I take that long? I took an ETF long. I'm trying to think when I took that. Actually, I apologize. I took the long in F. I didn't take the long in F up here. I took the long in F. I did take it in here because I was looking for the pullback, but I wasn't sure. That's right. I'm sorry. It came down, didn't fill the singles, went back up, and I bought the ETF. So I totally apologize. It was not here. And I held it because it went up in G. I did a bunch of things as far as it went up, took some off, added, went on. So I actually had that long in F from here, from F, G, and H. So I apologize. And then I also took another long, again, with H when we took out G's high and took it off. I was a bunch of it off near D's high, still had some when it came down, and then got out of it. So it was a decent day overall, nothing earth-shattering because I'm playing with a lot less what I'm playing with the options. But the ETF to me is a lot safer when you're getting this volatility and chop inside of here because this was a lot of chop in here. And then I basically kind of played innovator down here when I took that long play. Yes, it bounced off the bottom, but again, that's why I took the ETF because if I took options up here and then it does decide to go down and fill at least this single print or this single print, I'm going to be taking a lot of heat. And when the market's up 2.5%, I really don't want to be taking a lot of heat on the long side, if that makes sense. It would be a horrible thing to lose on the long side after the market had such a big run. So that's why I played the ETF. Okay. Yeah, I did not take it up here. I apologize. All right. Destinations for Monday. So for the upside, we have 10 wide at 320.06. Then we have today's high of 321.28, which is now a weekly high. Now, here's one thing I did miss for a quick short in E. I would not have expected E to do what it did and never see it again. I didn't realize we got up. I have single prints. They start at 321.29 now and get filled at 322.04 from February 5th. Now, ES filled their single prints. I don't know how mine are so far off from theirs. Had nothing to do with a dividend or anything like that. But I do have single prints that don't get filled to 322.04. So that would have been a nice, quick short play to take maybe a 10-put contract because they finally had something to lean on. They had nothing to lean on. You know, these price voids and price vacuums are incredibly important because, yes, I wouldn't doubt we had longer-term money in here throughout the day starting to nibble. However, this run-up was short covering and just short-term algos really playing the lead part in it. And they had nothing to lean on because I said above 318.11, there was nothing to the 321 level. And look where we got to. They finally found something to lean on. So it would have been a good quick scalp short, but I didn't realize it at the time. All right, and then so I gave you the upside. Now, and then above the single prints, we don't have anything to 324.61, which is a daily high. For the downside, and these are some pretty incredible numbers. My first destination isn't until today's low, so that's $2 away. 317.16, and then filling the gap at 313, a 416-point gap. Look at this gap from here to here. Then below that, we don't have anything to the 11 wide, the 9 wide, I'm sorry, at 311.25. which was going to be an upside destination the next day, turned into a downside. Then guess what? We don't have anything to another daily low of 309.08, and then filling another gap at 308.13, a 95-point gap. That's from June 3rd, which after we flushed out, I thought would have a good chance of filling it. And look, 308.13 all the way up to 321.28 in one day. Incredible, incredible stuff. So there's your downside destinations. Now, let's go to the charts. And this is pretty amazing things to look at too. We are now officially up in the monthly as far as I'm concerned. One time framing up 2 months. The next destination on the long term is the all-time high. The NASDAQ composite made a new all-time high today. So yes, I look for pullbacks right now, but unless something drastic happens, I can't imagine the all-time high for the SPY. It won't be in its future down the road. So one time framing up 2 months, next target, all-time high. Weekly, one time framing up 3 weeks. Beautiful distance, right? This shows you how a trend is still has legs to it. After 3 weeks of balance, we went up. Last week, got distance from it, even though we closed the gap. Got this week, tremendous distance from it, blew through that weekly high. So now, here's your stepping stones to the all-time high, right? We know the monthly is February's high, but on the weekly, now they have something to deal with. 325.85 is a weekly high, and then we have the sellers have their own huge gap up at 332.58. So it's like 600 or 700 point gap. Not going to be easy to fill the first time there. Just like I'm talking about these daily gaps that aren't going to be easy to fill, this one's going to be even more difficult to fill for 2 reasons. Not only is it a huge gap, it's a weekly gap. A little more significance there, right? That will be the bear's last line of defense in the S&P to an all-time high, is to defend this piece of real estate. Question is, when we get there, and how long of a battle will it be? And then on the daily, okay, again, really for the daily, yes, there's a couple of daily highs to take out, but the next real destination on the daily will be that 325.85, which is a weekly high, and then that huge gap. Gaps are my main focus now. Both sides. This gap is a main focus. This gap, another one here, another one here. We have gaps all over the place. Now, would it be healthier? Would it be healthier for the bulls to pull back and to consolidate a little bit? Yeah, it would be. I said yesterday, even though we've gone up, the monthly is very healthy, right? For me, it just turned to up. Weekly is very healthy, but the daily, I said, has structure below, which is going to start causing concern, even though we balanced 20-some-odd days, went up, balanced, went up, balanced, went up, balanced, went up. But these gaps at some point will be cause for concern. So can we get the all-time high without these gaps filling? Of course we could. However, I think the underlying structure then is going to be very poor, and at some point, you're going to see this happen again. If we ought to pull back, fill this gap, at least, I'm not saying to fill it Monday. I'm talking about over time before we get this gap in this high. Come back, fill this gap, consolidate maybe in here, right? Consolidate between the 310, 320 level. Trade sideways, right? Markets don't go bull bear. Bull bear. They'll go bull, balance, continue bull. Well, it would be healthy for them to consolidate and then go back to bull. That's just how I look at it. Again, that's for the overall health of the market. As far as my day trading, I don't care what it does. If it wants to go straight up on poor structure, that's fine with me. I'll just trade what's in front of me. I'm just talking about the overall health of the market. Anyway, We had a really good day today. Come check us out at camelbacktrading.org. Look at the beginning of this video again to get the information on the webinar a week from tomorrow. Have a great night, great weekend, and we'll speak prior to the opening on Monday.